Alright, welcome to Market Crest, where we focus on fundamentals for directional buyers and technicals for entries. And what you can see here is the USD charts, which last week we made analysis talking about the USD going to the upside. And currently, it's so unfortunate that the USD did not come to our POI specifically, but it used this form of demand for a push, which is not bad. And currently we are looking at a bullish leg on the DXY, except maybe the DXY traps us at some point, which is very unlikely. So this is a break. This is our high. This is the bullish leg. So I'm looking at this point as a demand. Price should bounce here one more time, and then we can see price going to the upside. Except maybe due to the FOMC on Thursday or Wednesday, we might have a price bouncing here, and if wash comes out bearish, then we might see a pullback again. This is my view on the Dixie. Remember, it's just tactical, so technically, I'm just bullish on the Dixie and neutral on the Euro, kind of strong on the pound. Then I'm kind of bearish on the yen. Yen is quite bearish as we can see. The card is kind of stronger than the Swiss, so Swiss is weak. Aussie is kind of stronger than the NZD, but the short-term strength, which is exactly as we analyzed for the past month. So looking at the Dixie futures, Aussie futures is not on my watch list. The pound futures is on my watch list. So why is this on my watch list? This was a liquidity graph or a breakout structure, you can call it. So this is supposed to continue higher, but it bounced off the supply. Now it also broke the supply. So we have a next target at this point. Remember, we in mechanic analysis that we wanted to see a change at this area for a short, which the market trapped us. No doubt, of course, there are losses. There was a loss here, but there was a win here. And now we have a supply here to short, and I will take this short. So the reason is because if you're looking at this as the bearish leg, so this is the bearish leg, it has to come continuation to the downside or it continues higher. So I would like to take this short somewhere here, but we might see weakness in the dollar and sorry, strength in the dollar. This price will bounce off here, and if you see weakness as per FOMC, you know price is supposed to go as high as this point. So let's just keep that in mind. Card, we talked about the card futures. We're looking at shorts, it worked perfect, but this week I'm not too impressed. The euro futures looks good too, but this was our low, this was our high, and this is an entire bearish leg, so price must continue lower. And if price is supposed to continue lower, we are expecting this point. So if that's the case, you have to find a short within this point to the downside. That's just how it's supposed to be, and you just had a breakup structure, and then this is the high probability point because it trapped buyers. So if you see your shorts anywhere here, you can look for confirmations and then take it. So that's for the USD and the JPY. Yeah, let's look at the yen futures. It's quite interesting. If you look at this on your weekly, what we do have is that this is our last structural point, right? So price is supposed to continue lower, and it just got broken. So this must continue, And for that reason, this is our low, this is a high, this is our last high. So this is this bearish leg. Okay. And if you go to your D1, sorry, yeah, D1, what we're saying here is this must continue at least one more time. So we have a D1 supply here and then push to grab liquidity. And that's if there's going to be dollar weakness from Kevin Wash. So this is what I'm looking at. And the final guy is the Swiss. Looking at this on your monthly, you can see that this was a bullish leg entirely. So we are looking at a bearish leg also. And if we are looking at a bearish leg, we just had a break of structure to the downside. So this would just be a bounce here, pull back to continue just to grab this liquidity. That is my view. And the previous weekly candle was a bearish momentum candle. So this is now a range we do have. This is the range we are working with. And if you look at it from your 4 hours, this is liquidity. This technically might be liquidity. So if we see price pull deep, that's when we can take our short, but you can also take longs if you are really good with that. Because we had longs here, there was a pullback here, then the short came. We had longs also here. It was just a pullback for the shorts. You can do that if you have the strength. No, but the Swiss, I'm bearish on the Swiss generally. So let's get to our charts. Since we are bullish on Aussie and more focus on Aussie NZ, Aussie yen strength. As we can see, we've been talking about this is long. So this is our bullish leg, this bearish pullback. So we're looking at another bullish leg. And if you're looking at the bullish leg, cut it on D1 and the 4 hours. So we just had this break. So I was looking at price coming back here, no, it has failed and it's going higher. Fine. So what do? We wait for an opportunity to have longs. Now, next week we have the yen, the interest rates from the BOJ. So this point might be very dangerous. Might be very dangerous. But even on Monday, this Tuesday, you see price drop to this point. It will make a whole lot of sense to take a long position. So that's my view on the AUD JPY. AUD Swiss seems to make a whole lot of sense too. So remember, we were looking for a short here, but there was no change on the lower time frame. So we made good use of the longs here and the longs here too. So it was a fantastic one. If you look at this on the 1 hour time frame. So this was the longs, perfect longs last week, and this too. So, but this we didn't take. But we now have a break here. So if there's a break now, there's a higher probability that this point is going to be a buy. So you can participate in that next week. I have my Cardian. I Cardian is bullish. So remember, I was looking at price this way, and this technically might break to the upside or just bounce off somewhere here to the downside if the yen comes out more hawkish. The BOJ comes out more hawkish than anticipated, but we had a D1 demand here which made a whole lot of sense, and now we are looking at this point also as price should come here and we can take our loss. So that's what we're looking at for Cardian. We have the Euro AUD. So this is the Euro AUD. We remember we bearish. First of all, we looked at this point as liquidity graph. So if that's the liquidity graph, this point is not supposed to hold at all, this supply. Um, Fortunately, the Aussie is still technically fundamentally stronger than the euro. So remember, I was looking at this demand holding technically from a technical standpoint on the D1 time frame. What we did have was this demand. We took short somewhere here. I think we had another short somewhere here, and now there was a short here which we didn't take, but we took this little lumps here. It was just a quick in and out. Let's look at that from your 1 hour perspective. So the reason why we didn't take this short was because I was looking at this point as the supply, which I missed entirely that this point grabbed liquidity. Yeah, so that was the supply zone and price played out okay very well. So now here's the next logic. If this was a liquidity or breakout structure now, that is a high probability area of short. We expect price to come in there. So you just have to identify your supply zone properly. So that is very good. We look at shorts from that angle. Now, the only issue I have here is that if you look at it from this technical standpoint, this is a bearish leg. This is a bearish leg. And then this is just the break. So price might come lower one more time. And if it's coming, this might not be liquidity. Sorry, that might be liquidity and it's come to a higher point because this entirely is a weekly supply zone. If you look at it from a weekly, it's a drop, this drop. So if you look at it from H4, I'll still take these risks, and then the upper risks, I'll still take it. It's all up to you. It's risks, manage your risk. I also have the Euro NZD on my watch list. So because of NZD is still restrictive in a restrictive policy. So if you look at this on your weekly, I'm expecting price to continue lower. Why? Because this we consider a bullish leg, this we consider a bearish leg. But now we are in a complex pullback on this because we had this bearish leg, we still had this bearish leg, so I'm expecting continuous bearish leg. That's how I'm viewing it right now. So price should continue lower. And if that is the case, previous bearish candle was this, and we had a wick out of this point, so I believe price should continue. And if that's the case, I'm expecting these points to hold this daily supply to hold pound card. On our weekly, this is just the first breakout structure. So I'm not supposed to look at days, but this is the first break. This is just the continuation point I'm looking at. The price to continue higher, but then this is our range. This is a high, then this is a low. So this is internal if you're looking at it from that perspective. And the D1 time frame. So all this consider liquidity, but they might see price bouncing off this point before coming down. Why? Because on the 4 hours we are looking at this range. So this was the first range, and then it was a good point to long, and then this is a second point to long. Why? Because this is the range we are looking at. This is the range, and then consider this liquidity. This is liquidity, and maybe also this is liquidity. So the target might be these points before we might see price going to the downside if CAD becomes stronger than the pound. So it's all about looking at it, and we might also see one time bearish leg before a push, which will even be more fantastic for me. The pound card, which if you look at this on your weekly, it's bullish entirely. So this is still a bullish leg, and we want price to continue higher because this was the first break, and then we had this pullback to continue. Um, this is also the second bullish leg, so we want it to continue. Going to our D1 time frame, this is D1 zone. So If you remember last week, we talked about price bouncing off this demand. It was a very good setup. So now you just have to understand that if this is a demand, what do we do? You look at it, it is not clear. This is structurally bearish on this lower time frame points from this angle. So this is the first break to the upside and it's still holding. So I will wait. If I see a break here, pull back, I'll be longing, taking that risk because I believe this is now a demand. But see, if price comes lower first, that will still give us more momentum to buy to the upside. And note, I don't like showing the pound CFDC, sorry, the USD CFDC anymore because I've already analyzed it in the futures. So you can look at it carefully from the CFD standpoint. I have entered this series, which is quite interesting. If you look at this on your weekly, okay, let's first of all look at this on monthly. Now, this 49.56 area is my target. That is my target long term. So throughout this year, I believe. If you look at it from your weekly, so if you consider this the range, what is actually not the range, but let's assume that's the range. So this was the first reaction from this point. So now it's coming to take it out, and that becomes liquidity. So what do? We consider this now as our range, and that is just the first break on the weekly. So price is supposed to bounce off this D1 time frame to the upside, so I expect price to continue higher one more time. Or if price should come lower, no fine, no problem. So you identify your lower time frame to find confirmation entries. So this was a zone. This guy grabbed this liquidity, becoming the perfect zone POI, and this was the range. This is the range. So I expect a break here, pull back, and then you can continue. So this is quite a high probability. I'm just waiting for the break of this point for NZJPY. Why? Because if you look at this, it's supposed to continue to the upside on a weekly, which is fantastic. And you can consider this a target. You can also equally consider this a target. So there is a lot of room there. You go to your D1 time frame. Price grab. Can you consider this a liquidity grab? Maybe. And remember, we are in a bullish leg. So if you consider this was a bullish leg. Yes. But it was a complex one. Why? Because it broke structure or it grabbed liquidity, grabbed all this, took everything out, reacted from this point, bounced. So we look at it as breakout structure, bounced off here, but then it went to the upside. So definitely that is a breakout structure to the upside. Price came back. Now this was the range, but now that was internal range. It grabbed liquidity using it. So there was a long opportunity we had. And for this reason, we now expect price to push higher at least one more time before we can participate. So if you see that price that way, you might take it. If you can't, you wait for another opportunity. So I've been shouting for the past few weeks that silver is supposed to drop to at least this other point, 53 area. And if you look at it from your D1 time frame, this is an internal range. All this is internal range. Sorry about my chart being dirty. So we expect price to continue lower one time before we see a bounce to the upside. And the bounce to the upside will the target be? I'm looking at 72, but the first point of target will be 64. So it will look something like this. This is what I want to see before we see a major drop in the silver. Equivalency to gold. To gold, what we have is, if you look at this from your monthly time frame, that is the monthly demand. And the previous monthly candle was a bearish momentum candle, so we are looking at price coming to a supply zone as high as 4,500 for 600, somewhere there. And price is bouncing off the demand. If you look at the demand very well, what we see here is that this is the range we're playing with, and price came, group changed, went high, bounced off the supply, which is good. So we expected price to close below what failed, and then we had this point. So technically, what you might see is a bounce all the way high. But what I would like you to do is to look at it technically. Now, price has bounced off here. If you see price come lower, break structure to the upside, you can long, or if you see price break these points one time, then break to the upside, you can long. That will be a high probability setup because this is not just the target is as high as the upper side. That is what we have for gold, and now we go to our indices. Indices, this is what we are looking at for the JP225, which we've talked about for the past months, and it has been giving us good setups. So this is our targets going to the weekly. Previous weekly candle was bearish, so we work with this supply. This was the supply we talked about. We will move for short, but remember we took the longs, which we did. We took these longs somewhere here, all the way here, and we left. So there was a short opportunity, but we were not in this short. So now we are reacting from this supply. If you see price go down one more time, pull back, of course you can take the shots in this bearish leg. It's the same thing that happened here. The same thing happened here. Continuations are real. You have to understand how to trade them. Um, the same thing is happening here. So we have a short here on the US 30. So the target we have is still somewhere here. This is the target, the first and the second. But the overall target is still lower here. But price might bounce here and push higher. You never know because we might be looking at this as a high, low, and then the high. Okay, so we now move to NAS 100. So the target is still far away. We missed this because it missed us by I think a few pips pending order. So this price should still be lower, but it's not interesting to me. Okay, so our German 40. Remember we are looking at it, took this trade on Friday, so Thursday, Friday. This was the first point of break and trapped buyers. Then we had sellers, trapped sellers, and took out sellers. Now broke structure, you can call it trap buyers whatsoever. So I saw a change. I took the longs, and if you look at these on your D1 time frame, this is looking good. So we can buy from this demand technically. And then we also have our UK 100, so which looks similarly to that, and we expect this is continuation, which we expect price to follow going to our D1 time frame. We just created something that looks like a rally based rally, and the 4 hours we have a 4 hours demand, so I expect price to bounce off here to continue high. That would be a good setup. That's a good setup because this was reacting here, so this was our range, and then this is all in this particular range. So that's what we do have for the week. Trade safe.